MBI.com. This is John's report. It's for the 30th of September, and what a wild time it's been. September has, not been particularly pretty from a bull standpoint. It started off with a little bit of that pump, but as we can see for the daily, it's faded all below for most of the rest of the time, and that's because of that MBI white leading here. And just the complete softness here from DOC red has once it rolled over, it's been continually cascading. We got a little bit of a tip up now, but we're still at that 19 level. So these are extreme oversolds, and that's where you get some of these violent swings both up and down. We expected to move back up to that previous break of the 0% line. Got that, faded off completely, retraced all the way back to the lows. We're seeing some modest move back up to it. You can see MBI red leading this, so any pop is likely to fade out. Maybe if it gets to the 23, I don't even know if it'll get that far. And some of this is just the reality of the macro considerations taking place, and there's just a lot of uncertainty as to how severe things will get. And of course, you're going to have that optimistic run. But when you get so many in one direction, it makes it easy for turnaround plays. And so there's literally what the market will look for is imbalances. So I would expect more of this wild range volatility. You can see the NQ looking weaker even than the S&P from its MBI readings. So we're getting a bit of a divergence, and that's where quality selection, that kind of thing, is going to take place, and expectations for the future. Euro's been on a tear for no good reason, other than the belief that Italy will toe the line for a while, but more likely this is a result of some softness in the dollar, simply because of this expectation that there's going to have to be a flip back towards quantitative easing, which I think is problematic, but it's also problematic from a rate increase probability as well, because if the Fed goes to where they say they're going, you're looking at disastrous effects economically. Of course, your softness from the good numbers for jobs and that, but that's a question of whether or not you believe some of that data that's collated and massaged from months past. And so the real data that we keep seeing just shows continued slowing of things. And of course, in the market's view, that when things get slow, that the Fed is going to then obviously flip to easing. And I don't know that that's a guarantee. And that's the literal battle that's taking place right now. Gold looks to be the longer term beneficiary, but as we've talked about, you get quite a bit of I don't want to just outright say manipulation, but I think you get some adjustment because of the uh, less than opaque nature of it when you're trading these paper gold versus the actual real commodity. And now you've bifurcated the whole setup by eliminating Russia and parts of the East, and so you got a whole separate trade taking place outside of uh, regular dollar trade. It makes it very difficult to clearly define things. And oil holding at that 80 area where it's suggested that the U.S. wants to buy at, which we'll see how that's sustainable, because if demand continues to soften, then you would expect to see crude prices fade with that. But currently, we haven't seen that kind of softening, and particularly going into winter months. Well, of course, the Nord Stream situation and everything that happened there. We know what the situation for Europe looks bleak from at least natural gas and those kind of support elements for the winter coming, and how they're going to address that. Be interesting. Of course, blame game goes, but we know that the sophisticated nature of the attack and the type of explosives needed to have damaged Nord Stream, uh, only a couple players on the world scene can handle that, and um, no incentive for Russia to do it, since they're the ones who benefit from the pipeline itself. Doubtful Germany is going to want to sabotage themselves. That only leaves one player who's promised that they would make sure Nord Stream did not function if Russia. And that's an interesting one, because that really damages their European partner. So that's a whole different story. But oil is not poised to move lower, at least in the near term. It just doesn't seem reasonable. What's been interesting is to see the support maintained here with Bitcoin. Despite the weakness in the market, it has bifurcated from it. And this was that postulate that I gave, that the potential for a breakout move from Bitcoin, and that is possible. Um, how probable it will be just depends on liquidity, and we're not sure that there's that much of that, particularly since money is no longer cheap. You can already see the MBI white leading in this, but Magenta still up above. Magenta pivots over, then you would expect to move back to the zero as soon as that takes place. And from an ETH, similar. This time we had rising 0% as caught up to it, and looking almost identical to the Bitcoin reading. Excuse me. 50K. So we had the deep down move came through, and then turnaround buys started with the Magenta rising coming forward, and that's currently the situation right now. And it's still in the positive mode, coming back up to the 50% of the breakdown. Not surprising within that, and you're going to get a lot of those upside rips, particularly within short runs. And you can see this started towards the end of Thursday. Actually, well, even in the beginning of the day. This was the pre-market from Wednesday evening, and then as we started to go into Thursday pre-market, we had the major sell-off continuing as the just real recognition in Europe in that how things are going, and it's not good. But in so creating so much to the downside, you create opportunities for short cover rallies, and we got quite a few of them, and some of them were pretty sustainable going through here. It was pretty clean from a paint bar standpoint. And then by mid morning, after that bump, we saw a significant fade take place again. That was all pretty clean. And then we caught the buildup again and push. And once it starts, it gets a little erratic because you get dramatic short cover pops, fades a little bit, and then they look for new buyers. And so this is just those classic ABC setups. And then of course we get in here into post market, which saw some continuation fill back of what positive extremes, and we talked about those and just the markings from, and we're seeing a nice little buy rally that's taking place, and it's consistent with what we're seeing on the 50K readings as well. So daily still in its sell configuration, but met with some buying within that 50K, and here we can see it related in the 5K, where we're just going to get some soft retraces until that rollover on the 50K. But an exciting month, and I think that October is going to be filled with just as much, and if not more, fireworks as it relates to finishing these things out, and we start to get towards election and that whole question of control and everything else, and how it will play out. And I think that's going to have a significant impact on the market, because actually be bullish if there's a parallelization and the recognition that things aren't going to move in any one direction, and you end up with a bunch of stop gaps just to keep things going. So we'll see how it starts to play out, but for now, you just got to go with the signals and be prepared for these kind of moves back and forth in between. And I think that's really good from a trading standpoint. As always, though, the indicators will be going out this weekend, and you'll be all set for the start of October. So very exciting. As always, look for me on the Skype chat. Trade well. We'll talk to you later.